Even though this trade hit our target, why wouldn't we say that this is a trade that has got an edge? And what do we actually mean by an edge? So this and more in this video. Hi traders, thank you for joining the Master the Markets team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Stu Norpan here, founder of Master the Markets, Elite Conference and the Traders Open Day. So today's topic, we're going to be looking at what we covered in part 1 and part 2 of our live trading session video on this particular trade, on why even though this trade did hit our target, as I explained in entry and trade management. And then we went on to look at why we reduced the risk of this trade as well. Now we're going to be looking at why wouldn't we call this a trade with an edge? Okay, why did we actually reduce the risk? So now to understand that, we have to define what is an edge first. Okay, an edge, I mean, a lot of books have explained this, and you can find a lot of definitions from traders' perspectives as well. Now, an edge is simply one that gives you a net profitable result over a cumulative set of trades. Okay, cumulative set of trades.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Now the key word to note over here is not even net profitable. It is over cumulative. It has got an unique feature to the way you are selecting trades, executing it, identifying it, trade managing it to give you a net profitable result cumulatively. So the first point you have to understand from what we mean by an edge is never think in terms of just one trade. It's never about a single trade. Never think in terms of one trade. That's the first point. It's not one trade. Edge is never defined over one trade. Number two, an edge is defined over a cumulative set of trades. Cumulative means what? Would you mean 2? Would you mean 3? No, I would say at least minimum 20 trades. Minimum 20 trades. Execute it over minimum 20 trades and see how your results plan out to be. Now, does that mean your edge has got to prove itself over 20 trades? That means you've got to become net profitable? No. The main thing you're really looking for in the 20 trades is not even the profitability, but whether your maximum drawdown has been hit in that 20 trades.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
If it fulfills all of these 3 criteria, then you can say that, yeah, okay, you've got an edge. And then when you increase this 20 to about 100 trades, and it still maintains your edge, doesn't hit the maximum drawdown, you've gotten to profitability, then you can say you have an edge. So the first word to always remember is cumulative, and these 3 points which I've said to you, which is not about one trade. At least 20 times you execute it to get a cumulative set of results, and even in that 20 trades you're looking for whether it hit your maximum drawdown or not. Another thing to also know and to observe is a strategy with an edge will have 3 qualities in it. Okay, a strategy with an edge will have 3 qualities in it. The first quality of it is that it is, some of you would have remembered what I said in the previous conferences and trading seminars where we've presented to many traders and over 20,000 people cumulatively until now. You remember we always say the SSR qualities. The first R is what we say it would be sustainable. It's got to be sustainable over the long run. Okay, it's got to sustain itself. It's got to reproduce itself. That's the R, reproduce. Sustainable, reproducible. It's got to reproduce itself. And then finally, the third thing is scalability. You can scale it to any instruments. Not only just one, but you can scale it to other instruments. So it's got to be sustainable. It's got to reproduce itself. Its profit's got to reproduce itself year on year. And finally, it's got to be scalable. That's another way of defining an edge. A strategy of an edge will have these 3 qualities: sustainability, reproducibility, and scalability. And finally, it's got to be proving its edge over a cumulative set of trades. And I mentioned the 3 points over here to you. Now, in this trade that we took in part 1 and then carrying on to part 2, then we explained about risk management, we are saying that this doesn't really carry an edge in the long run, because what we have observed is when it breaks out of the upper stretch line, if it doesn't do a primary retracement usually, we have not seen a real edge. Most of the time what it can do when it's done just a 1 bar interruption, most of the time what it can really do, if it does trigger you as an outsider bar, it usually comes back done. So we never really saw a true edge in here. That's why we have to reduce the risk if we do want to take trades like this. Okay, that's what we doing. So that's why traders always know your statistical probabilities. Okay, statistical probabilities in the terms of do know your win rate, also do know your price setup, and most importantly know your maximum drawdown. Very, very important. It will take you some time to collate all of them and know in clarity before you step into the market to place a real trade, but that wait is well worth it, because now you're entering the market with clarity and conviction. Okay, that's what we have done here at Master the Markets. We've collected all of this and put it into a structured way of looking at the markets, because of all the time that we have spent with institutional quant traders and the time that we actually put in our research. So I highly recommend you guys to watch our Trader Starter Pack video series, which is designed for beginner and intermediate traders, and it is information that's been collated over 12 years of research taught by institutional quant traders. Okay, highly recommend that. Traderstarterpack.com. I think there should be a link on this video. You can go and take a look at that. Alright, I guess that's pretty much that from me on this video, talking about the edge of the strategy and what do you do when a setup occurs when it doesn't fit with how you've defined your edge. Okay, alright, that's all from me, traders, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.